Well, thank you very much. Good morning, Mike Eppel.
Morning, Roger.
How are you this morning?
I'm doing well. How are you?
I'm all right. The Royal Bank, sort of all right. Profits for the quarter?
They're fine.
They're fine. They're going to be okay.
Yeah, $3.3 billion is the profit. Third quarter earnings just coming in from the RBC, Canada's biggest bank. That is a little actually shy of estimates, interestingly enough. But still, it's a big earnings performance, and they're raising the dividend by 3 cents. So, you know, it's steady. We'll say that. It's been very interesting, though, Roger, to watch these bank stocks on the TSX because they've been big laggards this year. And the CIBC, we talked about this previously, about that stock hitting a 2-year low recently. You know, everybody's got these in their Canadian bank mutual funds because they're 20% of the market. So you can't avoid it. So it's important that we look at the overall numbers and the overall performance at the same time.
Yeah, they're a fairly stable, good long-term investment, are they not? Or
they pay a nice dividend, but from a market perspective, sometimes, you know, you start thinking about, well, what's the global issues that the banks might be affected by, or their earnings in the bond market, all of these other things. And then at the end of the day, they just rake in lots of money.
All right. Who can complain about that? Shopify, everybody's loving that right now.
It's, you know, the story of the year from an investor standpoint on the TSX. This is an Ottawa-based company that does the software for e-commerce. And it's up 162% for the year, $500 a share at its peak yesterday, worth $56 billion now. It's in the top 10 of Canadian most valuable on Bay Street. You know, it's a growth story. It's a success, certainly in our Canadian tech sector. Builds up all of these other e-commerce sites, and you know, it could be seen, I suppose, as a catalyst for other, and it has been already, for venture capital in the Canadian tech space. And what have we been talking about here in Toronto alone? All of the big tech companies, and in Ottawa too, building new offices, hiring. You know, it's a very fast-growing industry, and this has certainly been a star performer.
It's great, and nothing breeds success like success.
That's exactly right. It builds on it.
When people hear about these companies, that's where they want to move to. So it's, it's good to see. One last quick thing: Sony and Disney fighting over Spidey.
Yeah, SpiderMan, the next installment of the SpiderMan saga may not be part of the Marvel Cinematic Universe because Sony holds the rights to SpiderMan. They're negotiating with Disney, and they're saying, well, this is about artistic differences and who's in charge at Disney, but at the same time, it's about money. Disney wants 50% of the profits for any new Spider-Man tie over to Marvel. Sony is currently paying 5%. 50% on one side, 5% on the other. Split up the middle. 25, 30%.
Yeah.
Problem solved. And Twitter can calm down this morning.
I sense there may be a deal because there's a lot of money to be made for both sides.
Absolutely.
On that, right?
Well, they'll settle it from a bottom line standpoint.
All right, Mike. Thank you very much, sir. Have a great day.
You're welcome.
And coming up.